Welcome back to another episode of Singapore's Real Estate Explained, brought to you by the J&N Investments team.
And it's the first time we are doing a night shoot at 9:30 p.m. And rationale is because we just received news that there's two developments that have fire discount just before CNY. And fun fact, tomorrow is CNY reunion dinner.
Yeah.
And we are here today because we want to bring you the latest updates.
Yeah, so Singaporeans generally like discounts, and the development kind of sold out most of the units once the discount is being released, right?
Yep.
So stay on to find out, if these two developments are something that you guys should consider because of the discount.
Yes, and this is something we'll be looking at to answer the question. Does it mean that develop discount means that it's a good deal? And how to define whether a discount is good or not?
Yeah,
Okay,
so we'll be looking at some of the developments in the past that actually gave a discount. After the discount, did these owners actually profited? If they did, what was the reason why? And if they didn't, what was the reason why also?
All right, so let's jump into it. So the first example that we're looking at is this place called the Residence at W. Where is it? Okay, it's at Sentosa. People say it's an atas area.
Yes, or people say it's a very inconvenient area because before you even start your journey anywhere, you take 10 minutes to just get out of the island. But if you're retiring, it's a very nice place, I agree.
Yes, and it's a 99-year since 2006, 228 units, big development, 23,000 square meter. So if you look back, that happened just last year, very recent, a 40% price slash.
It's not like 10% or 5%, it was like a 40%. So it was a very significant price gap from when the initial buyers actually entered in.
Yes, and those 65 units were sold. So how they reference this is they actually put it back and trace it back to the 2010 period when first people bought, okay, where we see that people are buying at 2009, 2007 per square feet at 2010 period at 3 million, 3.6 million to about 6 plus million. And they slashed the price for the two-bedder, 1259, it was going at 2.2. For the three-bedder, it was at about 3 million. So people say, wow, it's a good deal. Things were, the price crashed, the price was slashed. And is it really a good deal? So let's take a look at what happened today. So currently, where we are at the prices. Okay, fun fact, 1 year passed. And the
almost 1 year.
Almost 1 year. And the price, honestly, didn't really move. For some, there could be a resale market who people bought previously and sold currently. The others who will just continue buying, and they were still going at about 1,007, 1,008 at the same price, about 2.2 to 2.4 million. So if you look at a numbers perspective, okay, it has been some time where they sold these units.
Yep.
Almost for 10 years, there was no transaction.
Yeah, so the history for this development is also that the developers initially, they couldn't sell most of the units. So what they decided to do, is like, okay, if I can't sell it, right, I'm going to rent it because the rental over there, it's pretty strong by the expats. And after some years, I guess they realized when they wanted to liquidate their funds for other investments, and that's when they decided to release these units for sale.
And that's when all these units 65 was sold within 1 day. But till today, you can notice the price for 1 year has been is pretty similar. Okay, and that's why we are going to use an example, a very interesting example, which is just nearby to example, which is Turquoise.
Yeah.
Okay, also at Sentosa area, and look at how it should respond. Okay, so one thing that you take note is that from there you learn a lesson. One thing you take note is same place, near to your W, the Resident W, and Sentosa area, 91 units, 11,000 square meter of land. Okay, so they did this, back then, it was not something new, 2021. Okay, it was released a discount that launched from 1,290 per square feet. Crazy.
I mean, it sounds valid as a dollar per square feet for, if let's say OCR is a certain pricing now, you're buying to Sentosa, CCR, your core central region, right?
Correct. And there's something that people also quote for W. And why we need to look at this is because while, yes, the PS have been cheap, but floor plans are actually very huge. So the quantum is actually another level. So you can see in 2011 all the way to 2019, 2018, there was some that actually dropped the price, and it dropped another time in April 2021 from 5,006 all the way to 1,004, 1,003 starting from. And if we see where they are today, till today, from 1,004, it actually went all the way up to 1,002, the last transacted. So this is something that then we start asking, what happened? Why did this happen for such a development that is known to be very atas, that is known to be in Sentosa area? So one thing that a lot of people fail to understand, and that's something we apply for W residents, the myth that people think is drop price, there's always a point, a relativity. So we think that when it drop is always from like the current market price down below. But what Residence W and Turquoise, they took the perspective is what people bought long time ago, which is 2013 period, 2010. So this is something that people always had it's a good marketing They said, wow, it's a discount. Singapore love great Singapore
It's
sale.
like actually orange is worth at $2. Then initially the developers sell at $6. Then after that, when it dropped to $3, they say 50% discount. But actually it's still above the market value because it's actually only valued at $2.
Correct. And that's something that will happen at Turquoise because Turquoise, you trace all the way back to Seascape, Oceanfront, and Coast at Sentosa. You'll see their price are pretty similar. And in terms of quantum wise, if you look back, okay, we have this Turquoise being the blue color lying over here. Even after they dropped the price in 2021, the price is actually still pretty similar to the surrounding transaction like Oceanfront, the Coast at Sentosa. So you can see, yes, the drop price 2021 all the way down to about 3.5 million. But what we see is Oceanfront and the Coast is also going about 3 to about 3.2 million. So content is quite similar. And to make matters worse, there's no upcoming land bids that can hash the price. And just quantum wise, you can see even places like there was this other new development that came up called Cape Royal. Yes, PSF is higher, 2,000 plus per square feet, but the quantum is about the same.
Yep.
So that's when with this new launch that came out, there's the newest kid in the block. Quantum itself is also another key consideration that you need to factor in. The older PSF seem cheap, but if the quantum total price is similar to the surrounding resale or even upcoming new launches, you are kept by that growth.
Yeah.
Okay, and to make matters worse, okay, another thing to take note is about layout. Layout is so important because the rationale why they drop price for this remaining 16 units is the layout. If you zoom in, you notice some of the bedroom types is very small, very tiny as compared to the other kind.
It's like 2,000 plus square feet and you're paying this kind of quantum and you don't even get a decent room size.
Yes, and a very long walkway over here.
You can do glamping in the balcony.
Oh yes, and the balcony space is huge, planted that is huge, that gives 2,000 for a 3-bedder. And meanwhile, you can see the other one have not enough. I mean, if 2,000 square feet with 40% of balcony space not enough, you have a bigger balcony space.
Because they have to, because you have the view of the sea.
Yes,
the sea,
sea. So they want to make use of it and make it even a bigger balcony. So along with the small bedrooms, these are some layout type that in Sentosa, people are looking at big floor plate with big bedrooms, but this is not achieved. So that's why the demand for such units are actually much less. And that really caused a problem with exiting later on. And that's why layout is so important. When you look at when they drop price, is it really because of the fact of like entry price cheap and people are willing to enter, or is it a layout problem? A layout is a huge problem. Later on, when exit in the open market, people will once again value cheap and you're stuck for some time. And it's something we see not in this example, but for other kind of developments, which we will share on a separate occasion.
Okay, so next example, it's OUE Twin Peaks, which is quite a popular development when it was launched because there was a lot of hype and there were celebrities that actually bought into it.
Yes.
So it's actually 462 units. Completion is in 2015 along Grange Road. So you will see that multiple Asian celebrities actually acquired units at Twin Peaks. They include Jackie Chan, includes
Wang Qingqiao.
Yes.
And also one of the favorite pop star, many pop
Lin Junjie.
Lin Junjie, yes, one of my favorite.
Can you sing a song now?
I can't. Okay, so 571 square feet. It's a 1-bedroom, okay, but he was born in the project. So it was really a very high project and people were like,
There was a
wow.
lot of branding over it.
A lot of brand. And one thing note is that
and because of the brand, they were very overpriced at like 3,001 in 2013. For this area, it was pretty crazy in terms of their pricing. And that's also the reason why they cannot sell their units. And when developers cannot move units, right, that's what is happening today in 2025, that, they're giving discounts to these units. So you see in 2016, for the same stack in Stack 13, they actually dropped their per square feet from 3,001 all the way down to 2,003. And then people start to say, well, actually, it's a very huge gap. Then it should make sense to buy it, because like you have these people to buffer you in front.
Yep.
But what you realize is moving forward, the prices did move up a little bit, and then after that, it just went on a spiral downward trend all the way till 2024. Even during the COVID period, where the entire market actually performed or did very, very well, OUE Twin Peaks was just stagnant.
Yes, or in fact, on a decline. Or in terms of pricing.
Yeah.
So what exactly happened? Okay, one thing note is that what caused that unprofitable transaction, 51, 53, and you can see the loss is not just normal, it's
1 million,
1 million for the big floor plate
600K.
units. Yeah, 600K. For the small, you 570 square feet, also a 600K kind of loss.
Yeah.
So the reason why you have an unprofitable transaction, okay, aside from the erratic brand strategy of developer, they keep dropping price again and again and again. They set a lower and lower benchmark. One thing to note is right from the start, the PSF was wrong in the first place. It was going at about 3,000 plus per square feet for a 99-year land plot, while the freehold was going at only a 2,000 per square feet.
Yeah.
Yeah. So when they drop price later on, it's almost, I would say, close to the freehold price. But to be exact, if you really look back then, when they first dropped price in 2016, okay, you're going through at 2006. Okay, after they dropped price from 3,000, it was still way higher than that of the freehold prices.
I think for developments like this, when the developers actually drop price, right, it actually affects the future pricing also. Because if you just go back to the slide where the profitable and unprofitable transactions, right, if you're a buyer and you come to this development and you see, actually all the transactions in here, only two very, I don't know to say lucky or unlucky owners, right? But the rest all didn't profit. And if you look at their purchase dates, it's irregardless of which year they buy in, it's still unprofitable. So if you're coming in as an investor, you're going to say, okay, I agree that the pricing it's fair, but if there's a history of this and if opportunities to put it in somewhere else, right, I wouldn't take the risk to put the money into this development.
Yes.
And even if you're someone who's buying for own stay,
Yep.
you would use it as a benchmark to, lowball the owner or negotiate on the pricing itself.
So ideally, in totality, it's not a very good thing for development. And even after the drop price, as mentioned, even till today, at almost crossing about 2,000 per square feet, finally, the freehold managed to just go past the pricing.
Correct.
Yeah, so it doesn't mean that dropping price is a good thing.
Yes.
When at the end, the discounted price is still more expensive than market price and doesn't justify its value.
And I think sometimes when the price keeps going down, yes, Singaporean owners, I agree, they don't like to lose money. It means if they buy and it doesn't go up, right, they kind of hold the price. But it comes to a certain extent when they say, okay, I've held long enough. And how come the longer I hold, the more I lose? Then it comes to a price point where they say, okay, their mindset changes. Instead of like, okay, let me try to get the highest price on my unit, it's more on like, how can I exit the fastest in the market right now?
Correct. So that's when the prices go
One offer
haywire.
come in, they let go. One offer comes in, they let go. And that's why you see the price start to fall quite drastically.
Yes, indeed. So that's why it's something that we do look into consideration to decide whether this is a good discount or not. And with this, we come to the fourth example. Okay, Affinity at Serangoon. Okay, there was a season where they dropped price too. And to see how they perform after that. So it's very interesting. Okay, you look at this. It was, this development is a big development, 1,000 plus units, 27,000 square meter of land in the heart of Serangoon, OCR area. So back then, when they first launched, they actually launched at close to 1,600 to 1,700 per square feet. And that was actually, I would say, above break even, 300, 400 per square feet above break even. And that is when they are able to say, hey, if I launch at 1,007, my break even is 1,356, I have a margin to drop. And when they drop price, okay, that was actually after first 2 months of launching. Okay, they launched at 1,007, but they dropped price later on, you see, only July to August. And they dropped not just like 5%, they dropped about close to 7% plus to 8% and to 1,004, 1,005. And today, where he went up to, he actually went up to 1,008. The question is, why for OUE Twin Peaks and for your Turquoise, they actually dropped and never came back up? But this development managed to rebound. Okay, and one thing that you think, if you look back at the price, okay, first thing first, when they drop price, usually if they drop price, usually near it in the middle of the pricing, middle of or start of the launch, what we notice is that it's still not too bad because they still had another 3 to 4 years more to price stage accordingly. So about 7%, most of our clients bought Affinity at Serangoon, okay, have today made close to 19%.
Because afterwards, the developer have the opportunity to slowly increase. But this is quite an unlikely case because usually when developers drop prices towards the end of the timeline when they are going to be faced with APSD, and normally when they drop price, their goal is to actually clear all the units. So then you actually don't have any more price staging or any more increment from a developer after that.
Yes, indeed. And also, meanwhile, one thing is when they drop price compared to another development called Garden Residence back then, you can see the price gap after the drop price is about 10.8%. Okay, so it's side by side by buying 10.8% of what people have bought previously of Garden Residences. And along the way, you notice the orange line, which is Garden Residence PSF, had always been higher than the Affinity at Serangoon. And when the TOP for Garden Residences, okay, the gap became 17%.
Yeah.
Okay, and you're buying way cheaper than the surrounding transaction. Along with the fact of OCR back then, at 1,004, 1,005 back then, you can see other OCR come at higher and higher pricing, and this creates a buffer to allow to say, hey, this is actually a decent price to consider. And that's why it allows it to appreciate to that 26% upon TOP.
Yeah.
Okay. And the last example, which is very interesting is this by a condo called 4th Avenue Residences. They drop
Just
us
right outside 6th Avenue MRT.
yes, CCR area at Bukit Timah. 9-year land plot, triangular shape. People say, why do people buy the triangular shape kind of land plot? But let's see how it fared. So for this development, it's actually found in the heart of Bukit Timah. A big development, I would say 400 plus units, big land plot. Just say it's triangular shape. People say, why do I buy this kind of shape? But let's see how it actually end up. Okay, they launched in 2019 at about close to 2,324 per square feet. Okay, and after 1 year, or 1.5 year, okay, they actually dropped price to about close to about 21 to 22 per square feet. Yeah, so almost close to a 10% drop. That's a pricing. So let's see how it fared after it dropped price. You can see, interestingly, okay, once again, it went up by 20.87%. And that's something that is quite interesting because as compared to what people bought in 2005, people bought in 2001, today we can actually go up by 20 plus %.
Yep.
It must have been a reason, not just fire sale discount.
This was an example where a development dropped and they actually made. So then we want to trace back to see, for developments that actually dropped and made, right? What was the pricing initially at the start that caused the units not to be able to move, and when they drop, was it like on fair market value? So if you have to look back, actually when 4th Avenue first launched, if you look at from a quantum basis, in 2019, their 3 beta was about 2.279, so close to 2.3. And 2020, they actually dropped their 3 beta to about 2.1. So I would say about close to 100 plus, close to even 200K difference. If you compare to RCR on why at Q4 2020 when they dropped, right, the 3 beta quantum makes sense was because 2019, 4th Avenue is a CCR, but when you compare to RCR, 2019 3 beta was about 1.76 million for the new sale at the time. And 4th Avenue was at close to 2.3. So there was quite a gap in between where, it wasn't the closest. But then when it came to 2020, 2021 period, the RCR 3 beta quantum suddenly jumped. So you see 2021, the RCR 3 beta is at 2.084. So then suddenly you're getting like a CCR development 3 beta at 2.132, where people start seeing actually not much difference, but one is CCR and one is RCR. And that's why when 4th Avenue dropped, yes, they did drop, but they were at market, I would rather say under market value, because RCR at 2.084, US at CCR, you're at 2.132.
So to summarize, if you can buy a CCR RCR price or RCR OCR price, that is when the unit suddenly become very attractive, and the unit will start moving, especially when the market were to rise up to 2006 to 2007 per square feet later for the CCR market.
But always make sure also that, in terms of pricing, when you say, you can get a CCR at RCR pricing, right? Not only does the per square feet matters, because you realize that now layout and quantum matters a lot. So there is a lot of noise in the market that say, hey, CCR per square feet is so close to like RCR. Even if you talked about 3, 4, 5 years ago, right? Actually, the CCR prices were very cheap in some of the developments, right? But if you go and trace back to some of these developments, actually the development prices haven't really moved yet.
Yes, indeed.
Where the RCR, OCR are moved, right? The CCR prices are kind of stuck because it was either a layout problem or it's a quantum problem at that time.
And the quantum is too high, it may seem cheap on a PSL basis, but it doesn't mean that it will actually appreciate over time.
Like if your 2 beta is like 1,000 plus square feet.
Yes.
Or if let's say
a 1 beta is 700 to 800 square feet.
Or if like that same square feet in other developments is a 2 bed 2 bath, but you're a 2 bed 1 bath, for example.
Correct.
Then your quantum becomes the same.
Yes, and that's when exiting wise, when compared to something that is cheaper for a new launch, that is more efficient layout as compared to one that is oversized 1 beta that doesn't fetch a kind of quantum. In terms of the 2 bed 2 bath, sometimes will appreciate more than the 1 bed 1 bath, which is same price in the first place.
Yes, and this is something that we are seeing common, in the developments this year that actually dropped price. For example, the development that it's a freehold RCR. Initially, previous buyers bought in, let's say, 2007, 2008. And after they dropped, actually, RCR freehold became 2004. It made a lot of sense in terms of pricing perspective. And, we looked through the analysis, there are some units that really make sense because 2004 for a freehold in RCR, when your, let's say, Bagnall House OCR freehold is really close to 2005.
Yes.
But then if you look deeper, there are some units that you just cannot touch because of the facing itself. So there are reasons why developer drop. Some units you can consider and some units you really want to avoid, because when it comes to exiting, I would say in real estate, liquidity is very important. So if you're holding on to something that is cheap and you cannot liquidate, it takes you 1 year, 1 year and a half. And we've seen units that are stuck in the market like that because of the characteristics, right? The opportunity cost of you holding when you could have entered somewhere else, or the interest that you're paying for the next 1 to 1.5 years is actually very high.
Yes. So keen to find out more how to analyze this kind of bias or discount unit, do let us know. And more happy to share how do you actually go deep into it. And every single development is different.
Yeah.
They have your own characteristic, layout type in terms of the entry price and resale comparative. And that's where we need to be very careful when it comes to setting this kind of unit rather than just jump in when there's a GSS. Great Singapore Sale.
Yeah.
And this is something that we are very particular about.
So with that, we hope you got a little bit more insight on, if a developer actually drop price, when does it make sense to enter? When does it not make sense to enter? We try to share things as objectively and as open as we can. And there are also some things that, we don't want to say wrongly because not everybody buy for investment and there are buyers that buy into these developments for own stake and that's completely fine. But if let's say you are buying from an investment perspective, we just want to make sure that, you're clear with your numbers on when and what's the entry price that you should enter.
Yes, in fact, for the two developments that we mentioned right from the start of this video, there's one that can be considered based on investment perspective, and the other is a value trap. And that's something that we should do a deeper analysis. And would like to find out more about the latest updates or the research of these two developments, do actually scan this QR code right below and more than happy to run through with you whether you bought into the right development or not. And this, once again, thank you for watching to the end of this video. My name is Chris.
This is Grace and we'll see you the next time. Bye-bye.
Bye.